Welcome to another VSA Capital video. Today, cryptocurrency, and I'm delighted to be able to be joined today by two directors of Kasei Holdings PLC, a company listed on the AQUIS stock exchange here in London. Kasei is a team of experts in digital assets who've come together to build a balanced risk and reward investment strategy for crypto assets and also exposure to investments in blockchain-enabled companies, all gathered in one share that everyone can invest in on the stock exchange. So I'm joined today by Jane Thomason, who's a very well-known speaker, author and thought leader in the crypto space. She's chair of Kasei. And Jai Patel, a very experienced derivatives trader and former director of equity derivatives at VSA Capital. And he's the chief investment officer at Kasei. A very warm welcome to you both.
Hi, Thanks very much. It's great to be here.
Well, thank you very much for making the time today. Jane, perhaps I can start with you. We hear terms such as cryptocurrencies, digital assets, Web 3.0. For the benefit of the viewers, can you give us a bit of background and explanation as to what those are?
Yeah, absolutely. I think the key thing to understand is that blockchain is the underpinning technology for all of these. And blockchain is basically a distributed ledger. It's a ledger that sits on multiple nodes all around the world, and there is no central authority. So I think the first thing for people to understand is there's no central authority. And blockchain enables the direct peer-to-peer transfer of value, and value can be defined in many terms. And it's transparent, which means everyone can see what's going on the ledger. It's called immutable, which means once a block's on the blockchain, it can't be changed. And it's more secure than many other forms of transmission. So almost anything can be digitized and recorded on a blockchain. So then that means that digital assets, tokenization, for example, of real estate, and Web 3, which we're calling the future of the internet, are all underpinned by a decentralized database called blockchain.
I see. And have you seen these digital assets grow in popularity?
Absolutely. Over a 10-year period, Bitcoin is the best performing asset class globally of any asset class. But what we're seeing is continued growth of different kinds of digital assets and continued interest both in banks, financial institutions, legacy investment houses, the approval of an ETF recently in the USA. So it's very hard to predict what the growth will be, but we're seeing increasing adoption across industries, not just financial services, of digital assets.
I see. And how did you first come across digital assets and get involved both with digital assets and Kasei, and what really makes you a believer in digital assets as an asset class for investment?
Well, my son first told me to buy Bitcoin very early in the piece, and I completely ignored him and I didn't do that. So I would now have probably $250 million had I invested when he told me to, but that didn't happen. But as he came back to me later and said, "Did you get this? You need to understand about blockchain," which is why I started learning about blockchain. And then I could see across a range of investments and other industries why this was going to be so important, and I got incredibly excited about it. Now, coming along to Kasei, I'd been involved in blockchain and digital assets since 2016, and when the company was being set up, the team approached me to ask me if I'd like to be part of it. And what really excited me about it is that one of the challenges with digital assets is it's quite difficult to be able to secure, have your own wallet, have your own seed phase. It's a bit clunky and difficult. And, you know, your auntie, your grandmother, your cousin, your uncle, general people are going to find it difficult to do that. And so the idea that you could simply buy a share on the stock exchange and be invested in digital assets as part of your portfolio was incredibly attractive to me. And I thought, this has got to be a goer because it's going to allow so many more people to access this asset class.
Fascinating. Thank you. Jay, perhaps I can ask you now, what do you what do you see as the main drivers behind digital assets? Are they macro factors that affect the whole sector, or do you think factors affecting individual investments are going to be more important?
Well, I think, as Jane highlighted, we're seeing adoption in a lot of different industries, right? So if you take Bitcoin specifically, the conversation regarding Bitcoin's role in an investment portfolio has really kind of picked up steam recently, mainly driven by the ETF approvals in the United States. Now, we see Bitcoin as a form of digital gold. Now, it has a lot of the characteristics that gold has, and it has benefits in terms of how easy it is to transport or transact in versus physical, hard, heavy gold. Now, a lot of investment professionals would suggest that alternative assets in some shape or form do have a role to play in a diversified portfolio. So in that context, we see Bitcoin specifically driven by the kind of macro factors that may affect gold. But given that it is still a very small asset class on a global basis, and given that that kind of adoption and its role in portfolios is only really beginning right now, we have a scenario where we're seeing increasing demand, and actually due to the way that Bitcoin itself is built, we will see reducing supply. So that dynamic of the current supply and demand factors should lead, in our opinion, to a higher price as more and more people allocate. Now, what we at Kasei do, we try to split the asset class into Bitcoin versus all the other protocols that are trying to solve different problems. And those problems can be in various different verticals, such as digitization of real world assets, tokenization, supply chain management, decentralized cloud computing. There are a host of, I'd say, digital architectures that people are attempting to disrupt and decentralize. And there are various reasons for that. Now, from a very basic perspective, you look at what the banks are doing. I think they've realized that blockchain is a more efficient settlement mechanism for their back offices. So in that vertical, we may see more adoption there. In supply chain management, due to the transparency that blockchain offers, it is easier to trace and track the movement of products across the world. And we're seeing increasing use cases there. So, effectively, as to how and when the other use cases pick up adoption, we would expect that to really drive performance of those assets. Bitcoin, we believe, has its own catalysts, which are very much in play right now. But what I'd say is some of the other use cases and some of the other verticals may take more time, and we are still in an experimental phase as to how much adoption they garner going forward.
Interesting. So you mentioned gold. Do you see a crypto portfolio as being complementary to or a hedge against other asset classes?
So, again, I think we need to split the asset class in two, and I don't want to get too repetitive, but, one thing that Bitcoin's brief history has taught us is that it is a very decorrelated asset to traditional assets. Now, finance professionals love to talk about Sharpe ratios and diversification and things like this. And any asset that has displayed a degree of decorrelation to other asset classes is an attractive asset. Now, obviously, when we invest in alternative assets, the primary goal is returns. But I think its nature in terms of its correlation so far means it has acted as a kind of hedge. And I think Bitcoin itself going forward will continue to, it will act as a hedge, but the relative infancy of it as an asset class means you can still garner significant returns, even though the expectation is that the performance will happen in an environment where you would want hedges, right? So, if you look at the moment, the big kind of background story is US fiscal deficits, right? And, Twitter, X rather, loves to talk about the rate at which the US government is spending money. And whenever we start to question governments' fiscal decisions and the sustainability of the debt that we have in the world, Jai Patel himself was talking last week on 60 Minutes about the fact that the US is on an unsustainable fiscal path. Now, once you really start to question fiscal stability of the United States, you have to look for alternative assets. Now, that may be different currencies and different governments who are more responsible, but if you look at the world in general, especially post-COVID, generally central banks and governments follow the US playbook and ramp up the debt, forward spend your grandchildren's earnings is the theme of the day. So as that story gains more and more momentum, as I said, you really have to start thinking about possible alternatives to that scenario.
And so, interesting to get access to those alternatives. Do you feel that there has been a problem historically, or even or today, indeed, with investors, especially in the UK, having access to digital asset investments?
Yeah, look, we've made big strides over the last couple of years, and especially this year in the industry, in opening up the asset class. But if you look at the UK, I think what happened during the pandemic, there was a general free-for-all for all things financial because people were sitting at home with nothing better to do. And we saw accessibility to these products open up, but then when we saw all the inevitable problems of effectively, a short-term bubble in the space start to crop up, regulators and fiduciaries really took a second look and said, right, we need to do something about addressing this and regulating it. Now, the US has made steps, and we now have a Bitcoin ETF that is accessible to normal investors. The UK doesn't, so most UK investment managers are not enabling their customers to access the US Bitcoin ETFs. And we have a banking system that is still kind of putting the brakes on, and an FCA that's still, asking questions effectively. So, it's a long way of saying we have regulatory uncertainty in the UK, which we expect to open up, but in that respect, access is still difficult. And, that's a solution that we try to address by effectively holding the assets in a safe and secure manner, having an instrument that people are familiar with, that they know how to trade or invest in through their brokerage accounts, and effectively taking the hassle away from, like Jane said, mum and pop who want to be invested in the asset class but don't really have suitable options in front of them.
Yes, I can certainly see that. And yes, Kasei is simply a share. People are pretty familiar in being able to invest in that and have access, but they can gain access to a much more sophisticated crypto portfolio. For that ordinary investor who's just investing through a share, what do you think the key benefits for them of putting an investment in the hands of experts as such as the two of you, rather than say just dipping their toes themselves into a crypto, say by buying a bit of Bitcoin?
Yeah, so look, I think the mistake most people make is they chase the FOMO, as it were. They follow what people are talking about, they follow what their friends are doing, and as my father once told me, as soon as the London taxi driver starts talking about it, you should probably think about selling it. So look, we all know as finance professionals that the real value is earned in looking under the radar, trying to find attractive investments before the herd comes in, right? So, I think we do a lot of deep dive research, analysis, and try and really figure out what we think may be driven by real utility going forward. Now, I'll be honest, cryptocurrency markets kind of have a life of their own, and a lot of crazy things happen. Now, we try and shy away from the craziness because we, as I said, are trying to find genuine utility. On top of that, everyone in the team has experience of trading very volatile asset classes. So I actually used to trade Russian equity options, which, over 2010, 11, 12, 13 was pretty volatile because crazy things happen. And I think, having managed money and traded through various different financial crises, various different emerging market crises, hopefully, you hone your radar as to where big problems may occur. And, if you take what's happened in the cryptocurrency industry over the last few years, there have been very evident Ponzi schemes in operation that people just weren't aware of, that, this isn't real. On top of that, there was definite credit risk that was masked as yield. So people thought they were investing in some easy way of earning 20% on my US dollars, but all you were actually doing was lending your money to a very risky counterparty. And if they had a problem, you may not get your money back. So, when you start to think about things such as market volatility, credit risk, the average investor isn't really experienced enough, I would say, to be able to even, they're not even aware of the risks, let alone trying to figure out how to mitigate those risks. So that's something that, is our expertise, as it were. And that's what is our primary value add in terms of the management of the assets.
So you have those additional strategies in place to, is it more to improve returns or hedge against downturns?
A little bit of both. So, cryptocurrency markets are they're pretty well developed right now. And the kind of traditional financial instruments that are available in equity space, for example, have started to appear in the cryptocurrency markets. And actually the security of your funds when trading on exchanges, you can delegate electronically, etc., etc. So your funds aren't at risk if you're just sending it to a random exchange to hedge, for example. So yes, effectively, the options are there to manage downside risk, as well as potentially to add yield on top of a portfolio, which a normal investor wouldn't be able to do. So look, we very much believe that this market moves in cycles, and depending on where we were to be in that cycle, we have various different options available to us, either to hedge, protect ourselves, or to earn yield in a stable market, or to just participate in the upside if and when it comes. So
you say Kasei is a more balanced and perhaps less risky portfolio than that's maybe designed to outperform equities, but because it's based on digital assets, it may do that, but it's not necessarily designed to be outperforming Bitcoin itself.
There's no benchmark as such in this space, but the obvious one would be Bitcoin. Now, what I would say is that we would very much hope that as adoption increases on the other use cases, we could see a lot of value generated there. So when you look at the rest of the space, we really kind of feel like we're talking about NASDAQ late 90s type of thing, where the buzz was there, people realized there was a thing, it was called the internet, no one knew exactly what the applications of it would be, but there was a lot of belief that the applications were going to come. Now, in an environment where, say, a decentralized cloud computing platform starts to eat into AWS, or a decentralized social media starts to eat into Facebook, that's trillions of dollars of market cap that, it's a big slice of that pie, could generate significant returns. So in an environment where our research on the rest of the space comes to fruition, and if and when those use cases really start to accrue value, we would hope that we would start to outperform Bitcoin, because we're talking about industries which haven't been disrupted yet. And you could argue that, Bitcoin is the oldest horse in the race right now. But a lot of that stuff, as I said, is very early stage. It's NASDAQ 20, 25 years ago, and it's unproven. So that remains to be seen.
But you feel that being experts and professionals in this area, you've probably got access to these sorts of assets that the ordinary investor just doesn't have.
Yes, absolutely, because the space is so new and the architecture is also so new that most people really wouldn't even know how to, say, participate in a new issue of a new token, right? And it takes a lot of legwork. It takes a lot of focus on security and making sure you're doing the right thing, to make sure you're sending your money to the right place. And I don't want to rewind here, but the thing that most amazed me when I really started digging deep into crypto was a little thing called Uniswap, which is a decentralized exchange. And effectively, anyone can provide liquidity, anyone can list their own project on this decentralized exchange. And we have this whole architecture there for capital investment and experiment and new products lurking under the surface, which most people have never heard about. So the architecture is there to be able to access these types of things. But yeah, as I said, for an ordinary investor, it would be like, talking gibberish, effectively. So that's hopefully where we can help to translate the gibberish into something that may drive return.
Fantastic. I mean, that's been fascinating. For our viewers, was anything else you'd like to say to the people who are watching this video? Any final message you'd like to leave them with?
I think our investment team is second to none in this industry, and as Jay said, their capacity to be able to filter through the absolute myriad of new projects and hype and pumped up projects and be able to find the value is extraordinary. So I'm very proud to be the chair of this company.
Fantastic. Well, thank you for that, and hopefully soon this will stimulate a lot more interest in Kasei, and we'll have the opportunity to introduce you to institutional investors and some of our other investor contacts so that they can meet you and get to hear the story for themselves and ask some of the questions that I'm sure will have been stimulated by this discussion. So please, anyone who's watching this video who's got any more questions, please do contact us at VSA. In the meantime, Jane, Jay, thank you both very much for your time. Thank you.
Amazing.
Thanks for having us.